The foreign exchange market experienced some interesting movements during the holiday season, with the dollar index falling and the euro reaching its highest level since August. Investors eagerly awaited fresh clues on when the Federal Reserve might begin cutting interest rates, particularly as inflation in the United States falls closer to the central bank's 2% annual target. This video will explore the factors contributing to these currency fluctuations and their potential implications for the global economy. Holiday trading and market conditions. As markets in the UK, Australia, New Zealand, Hong Kong, and other countries observe public holidays, trading volumes remain muted after Christmas. Additionally, many traders worldwide were still on vacation until the new year. These factors, coupled with the anticipation of rate cuts by the Federal Reserve, have resulted in the dollar performing poorly against a basket of currencies. Federal Reserve's response to economic slowdown. While many analysts expect the U.S. economy to slow down significantly in 2024, the Federal Reserve is also expected to take action to prevent the gap between the Fed funds rate and realized inflation from widening too far. If inflation falls faster than the Fed's benchmark rate, it could lead to a tightening of monetary conditions beyond policymakers' intentions and increase the risk of a hard economic landing. Analysts at Action Economics noted in a recent report that inflation is projected to continue cooling, providing policymakers with the ability to trim rates by June to prevent passive tightening in real rates. However, they pushed back against the idea of a rate cut as early as March and disagreed with the market's pricing of a 154 basis point easing by December. They stated that such a scenario is unlikely unless the economy enters a recession in the coming months. Inflation and housing market data. Recent data revealed that U.S. prices fell in November for the first time in over 3.5 years, pushing the annual increase in inflation further below 3%. However, October's data showed that annual home prices continue to rise, indicating ongoing recovery in the housing market. Additionally, a MasterCard report showed a 3.1% increase in U.S. retail sales between November 1st and December 24th, driven by last-minute Christmas deals and promotions. Dollar and euro performance. The dollar index, which measures the value of the dollar against a basket of major currencies, experienced a 0.18% decrease on the day, settling at 101.44. Since its peak at 114.78 on September 28, 2022, the dollar has been on track to record its worst performance since 2020. Conversely, the euro gained 0.2% against the dollar, reaching its highest level since August 10. This year, the euro has seen a 3.08% gain, climbing from a 20-year low of $0.9528 on September 26, 2022. Yen's performance and the Bank of Japan. The dollar also gained 0.06% against the yen, currently standing at 142.47. Although the dollar reached a 32-year high of 151.94 yen on October 24, 2022, and came close to reaching that level again last month, the Japanese currency has since recovered. The yen has steadied near a recent 5-month peak, as the market speculates that the Bank of Japan, BOJ, may soon end its ultra-easy monetary policy. Throughout 2022 and 2023, this policy has kept the Japanese currency under pressure while other major central banks embarked on aggressive rate hike cycles. On Monday, BOJ Governor Kazuo Ueda stated that the likelihood of achieving the central bank's inflation target was gradually rising. He also mentioned that the BOJ would consider changing its policy if the prospects of sustainably achieving the 2% inflation target increased sufficiently. Impact on cryptocurrencies. In the world of cryptocurrencies, Bitcoin experienced a 3.36% decrease in value, dropping to $42,130. The performance of cryptocurrencies can be influenced by various factors, including global economic trends and investor sentiment. The recent movements in the foreign exchange market, particularly the dollar's decline and the euro's rise, may have implications for the cryptocurrency market as well. To sum up, the dollar's decline and the euro's rise to its highest level since August have captured the attention of investors in the foreign exchange market. As the Federal Reserve considers cutting interest rates in response to slowing economic growth, the performance of major currencies is likely to remain volatile. The Bank of Japan's potential policy changes and the impact on cryptocurrencies further add to the complexity of the current market environment. Investors and traders should closely monitor these developments as they navigate the ever-changing landscape of the global economy. If you enjoyed this video, please subscribe for more videos on interesting topics like this.